Hello, good morning, and welcome to today's live technical analysis. Starting off where we ended yesterday, we will be discussing the euro against the US dollar. In terms of financial releases, the US dollar openings figure came in better than expected, which we could attribute to the recent strengthening of the US dollar against the euro. For today, we're noting the preliminary HICP rates for the zone and France, if I'm not mistaken. These should have been released moments ago, so in the past 5 minutes. And let's see, it is a relatively bearish candle. We're still trying to figure out whether or not they were positive or negative for the euro. Let's see how that closes. So in the 5 minute chart, no real clear indication of how they came out. And as a matter of fact, I have not been able to see them just yet. But if this does close as a bearish candle, it might be bearish for the euro, which could imply easing inflationary pressures within the zone and as such might weigh on the common currency. Whereas if this is a bullish candle, it could imply that the preliminary HIC periods came in higher than expected, which could imply persistence of inflationary pressures in the zone and thus may provide support for the common currency. We are in the 5 minute time frame and we can see that is moving in relatively upwards fashion. So the past 5 minutes, it remained unchanged, and that was the release of the HIC periods. So I'm assuming, without any knowledge, that they may have come in as expected, so relatively muted market sentiment. So coming in as expected could tend to imply a slight uptick in inflation within the zone. But once again, I will have to confirm that later on once we have ended our live analysis session. From a more macro perspective, we are seeing that the euro against the US dollar continues moving in a downwards fashion. The RSI is closing on 15, but still, it did temporarily break below RS1 level of 1.0815. So I will be readjusting slightly that support level. Let's zoom out. We are on a 4 hour time frame. We can bring this slightly closer. So 1.0801 or 1.08 as a big figure for our newest one support level. It is still moving in a relatively downwards fashion. As you can see, it's still validating the downwards moving trend line. A bit of a concern with the RSI, but look at the Bollinger Bands. Tilted towards the downside, we have death cross being formed, the 50 moving average crossing below the 100 moving average. Perhaps our support level should have been at 1.08 yesterday, but still moving in a downwards fashion would maintain a bearish outlook for the particular pair. Now, this could easily change today with the Fed's interest rate decision set to occur during today's American session. The bank is widely anticipated to remain on hold, and as such, we will turn our attention to the bank's accompanying statement, in which, should there be an implications of keeping interest rates at their current levels for a prolonged period of time and thus pushing back on the current market expectations of a rate cut in September, it could provide support for the greenback and thus for the Euro USD could move in a downward trajectory. Whereas if it validates the market expectations of a rate cut in September, it could weigh on the greenback and thus Euro USD could move in an upwards fashion and could, as a matter of fact, reach close to our R1 resistance level at 1.0860. So we've readjusted our support level. We're going to be keeping our resistance levels the same, keeping S2. We've readjusted S3 slightly as well, since we brought them all slightly closer to the current price action. So S3 is at 1.0720, if we round that up. And now I just need to change this text label, 1.0720. So we have our support and resistance levels. We'll be moving on to the USD against the JPY. Now, it did break below our S1 support level. So Reuters had the expectation that the bank was going to remain on hold at 0 towards 0.10%. Now, we did say yesterday together that we would not be surprised to see the bank hike interest rates. And as a matter of fact, they hiked more than the markets were expecting. So the predominant expectations was of a rate hike for 10 basis points. The bank hiked by 15 basis points. Now, this movement in the 4 hour candle, I would not attribute only to the bank's interest rate decision. I would attribute to the comments made by BOJ Governor Rueda approximately 2 hours ago, in which he implied that the bank's terminal rate may not be 0.5%, but overall appeared to be hawkish in nature, thus providing some support for the JPY, as you can see from this 4 hour candle. Now, if we drop down to a 4 hour time frame as well, now the downwards moving trend line was temporarily violated, but still we can readjust. Still incepted near the beginning of July and then confirmed, began on the beginning of July and then formed close towards, let's see the exact date, so the 30th. So this was the creation, and this was a verification of indeed it being a downward moving trend line. We could keep what we had placed yesterday as well as a reference point. So this is an actual downward moving trend line. If the price action reaches up and validates, so it touches on the downward moving trend line, then it would be validated. But it has been incepted and would require validation. Nonetheless, moving in a downwards fashion, RSI has dipped below 30, implying a strong bearish market sentiment. If you look at the chart that we released today for the US dollar against the JPY, it has broken our, or is on RS1 level, if I'm not mistaken. I will be readjusting my resistance levels now, turning this from S1 to R1. 148.85 is now our new S2 support level, and we are hunting for S3. Once again, the pair's direction could easily change following the Fed's interest rate decision. And let me bring this down at 142.63. That is our new S3 support level. So I'll be spending a minute simply editing the text labels, so updating them with the new support levels and the most recent price action. So S1, S2 now becomes S1, S3 becomes S1, and so on. Yes. So this becomes R1. This is the objects list. We will be discussing geopolitics today. So we had developments yesterday in terms of Israel striking Tehran and Beirut. That is a very big issue for gold and oil prices. I haven't looked at oil prices today, but I'm sure once I open the chart, I'll see them having a reverse trajectory and now moving in an upwards fashion. We will discuss those implications as soon as we get to the chart. Before we do get to that chart, though, I would like to look at the British pound, which does have an interest rate decision by the BOE during tomorrow's European session. So we'll have a look at that, and then we'll dive into the geopolitics, the risks towards oil prices, gold, safe haven inflows. We'll have a look at that, and then we'll discuss a bit for the Fed. It's going to be a relatively easygoing technical analysis session today. Have a lot of work to do. We could look at a stock if you're interested in seeing Microsoft, perhaps. Uh, I'm not sure if we offer ASML. That would be very nice to take a look at, but if I recall correctly, we don't. Nonetheless, back to the FX. Moving in downwards fashion, target for the bears for me is 148.85. That is the next support level as we had placed together yesterday. That is S1. Lower than that is 145.85, which is S2. Lower than that, 142.63, which is S3. For resistance, it is our support and resistance level at 151.90. Note the second, well, not the second, the 4 hour candle which broke it validated a constitution of a breaking of a key support level and is now moving in a downwards fashion. R2 is our old R1, 154.75. R3 is 157.7. Overall, maintaining a bearish outlook for the Paris direction. For the British pound, we're seeing the dollar strengthening once again. It hasn't violated our resistance or support levels just yet, but we can see that this downwards moving trend line that we had placed together yesterday is still valid. This is a daily time frame. It is now taking aim for our S1 support level at 1.2775. If it breaks below S1, the next target for the bears may be the S2 support line at 1.2610. The RSI indicator is now dipping below 50, implying a shift in market sentiment from a relatively bullish outlook or relatively neutral market sentiment towards a bearish one. It has broken below the mid-range of the Bollinger Bands as well, and as such, I would not be surprised to see the pairs direction move in a downwards fashion. USD CAD, now CAD may have pared those losses. Now look at the daily chart, ended slightly in the reds. If it ends as we can see it here or lower, so doji formation or lower, this would constitute as a swing high, so retracement for the pair. The recent rise in oil prices we will look in just a moment. So we're looking for WTI looking for WTI cash. Look on the daily chart, it is moving in an upwards fashion. So we said yesterday, and we keep saying it, Canada is an oil producing nation. Thus, the rise in oil prices may provide support for the loonie as well. As you can see from the USD CAD chart, yesterday ended in the reds. So, and with that, we are going to be slowly entering the geopolitics segment of today's technical analysis session. Please note that the R1 resistance line for USD CAD is still valid, 1.3845. S1 is at 1.3765. RSI is on 70, so it does imply a bullish market sentiment. But with the recent tensions brewing in the Middle East, I would now maintain a sideways bias for the particular pair as long as today closes below yesterday's opening figure. So forming a swing high formation, which could constitute a reversal down potentially to S1. If it does not, we would switch for a bullish outlook. If it breaks below S1, then we would opt for a bearish outlook, but I don't see that happening just yet as we are on the daily time frame. For the Aussie, China's Caixin manufacturing PMI figure is due in tomorrow's Asian session. It is expected to expand, but at a slower pace. A bit of concern for Aussie traders may provide support for the USD against the Aussie. So you can see US dollar strengthening, taking aim for S1 0.6465. S&P 500 appears to be reversing its trajectory, but we still have the US employment data that is yet to be released, and the Fed's interest rate decision, the ISM and S&P manufacturing PMI figures. So this is all temporary. I think we should start off with gold. Gold is a very nice instrument. Yesterday we placed this rectangle. Now this was what we said, sell side pressure. It cleared it. It took out everyone that was going short and is now moving higher. And note how these candles are resting just above this region that we had mentioned, so buying pressure. Now we would now opt for a bullish outlook for the precious metal. Upwards moving trend line, broken above a prior high, and then fundamentals. Fundamentals. But before we get into that, RSI is at 67, bullish market sentiment, so maintaining a bullish outlook for the precious metals price. Now, before I edit and readjust my support and resistance levels, it is very important for us to dive into the geopolitics and the safe haven inflows faced by gold yesterday. So, as most of you probably know, there are issues within the Middle East. There is a war ongoing between Hamas and Israel. Now, yesterday, Israel decided to strike in Tehran and Beirut. Now, the striking of Israel within Iran, although that has not been confirmed officially, good morning, is a key source of concern. Now, Iran had just sworn in its new president 12 hours ago, and then a high level official was killed on its soil. Now, there are some reports and rhetoric going around that there will be a retaliation by Iran against Israel. That brings the Middle East closer and closer to a full blown war between Iran and Israel. Whether that happens or not is slightly irrelevant currently. The risk is there, which means safe haven inflows into gold. I will be going to the daily time frame. Look how it moved yesterday. I'm now opting for a bullish outlook. So the geopolitical risks faced in the Middle East appear to be funneling safe haven inflows into the precious metal. That is a big source of concern. Now, for Venezuela and the recent issues faced by President Maduro, in which the people appear to be out in the streets and protesting, and the comments made by two army officers yesterday calling for the army to take action, that could theoretically also provide some support for gold's price. But for that, I would be looking more towards oil, as its neighbor Guyana, which had issues with Venezuela a few months ago, had discovered a major oil reserve. As such, for that particular scenario, we'll be looking at the stock prices of Chevron and ExxonMobil, who may be more directly impacted from any uh, tensions in Venezuela. or a potential change in government, but that remains to be seen. So for that, we'll be looking at oil, ExxonMobil, and Chevron in particular, and not that much for gold. For gold, I would focus more on the issue between Hezbollah and Israel and the recent strike in Tehran. Those risks, those risks appear to be, excuse me, sorry, those risks appear to be funding those safe haven inflows, which we discussed. So if that continues, and if we see a retaliation by Iran, which is possible, we may see gold's price moving in a more upwards fashion. And back to the technicals. We have R2 and R3, which is now R1 and R2 respectively. We need to readjust our support level. So I'll be removing this box that we had placed yesterday. I will be removing this resistance level. Looking at the chart, it has broken above my downwards moving trend line. It continues to validate my upwards moving trend line. So that's a positive. Now I need to find where I'm going to be placing my S1 support level. If I'm being safe, I could place it much lower than the price action. But I said yesterday. So this was a resistance level which turned to support. 2403 is my new S1 support level. That is S1. If it stays there, so that would be my S1. I need to find S2. So I've left approximately the distance between my resistance levels is around $50. So $50 would be 2,350, and then 2,300, big figure for my S3. But if you look at where 2,300, it would be in between. I'd rather just keep it $3 below 2,297 for my S3 support level. That means our next hypothetical R3 resistance line would be around roughly 2,530. 2,530, our hypothetical R3 line. This becomes R2. We'll have a look at crude oil, so WTI cash, that is the ticker. And we'll be looking at that in just a moment to see how the recent tensions have influenced oil prices as well. Now, it's not only gold that is impacted, it's also oil. The Middle East is a key source of oil for the global supply. So, tensions rising in that region may tend to provide support for oil prices, adds the risk towards supply, provide support for that price. Essentially, in simple terms, if there is an issue or a possibility of a war in the Middle East, gold and oil gain. Whereas if those tensions ease, gold and oil lose ground against the US dollar. So they move lower, become cheaper. 2,297. So this becomes RS3 support line. So S1, S2, S3, R1, R2, and R3. Target for the bulls is R1, 2,432, R2, 2,483. Once again, depends on the Fed's interest rate decision. Or if the situation escalates dramatically and in a very fast fashion, so if we see a retaliation by Iran today, gold could ignore the Fed's interest rate decision, and the possibility of a war may overtake any negative impact from the US dollar. So this is our technical analysis chart. Upwards moving trend line broken above our sell zone, taking out sell stops, taking in for R1 now, R2 higher, R3 hypothetical resistance level. Overall, bullish outlook for oil's price. And now we move on to oil. So we had 75.50 as our S1 support level. It did break below, but for unforeseen reasons, which we could not account for yesterday, it is moving in an upwards fashion now. I do need to readjust my S1 support level, 74.75, which means I need to bring S2 and S3 just below. I'm looking for key support levels. This is nice. Yeah, but this was in low, so we need something slightly higher. It's high. 71.40. We're seeing a lot of price action. One, two, three, four, five touches. This validates this as a support level. So 71.40. So this is our S1 support level. 74.75. Adjusting. I'll be keeping R1 the same. There is no reason to change that just yet. So the other side is at 40. Bollinger Bands out towards the downside is still respecting the downward swing trend line. Now this is a judgment call. We are on the daily chart. So for the rest of the week, I would be bullish for oil's price potentially reaching 79.25. From a more macro perspective, I would be bearish as the technicals still support the bearish outlook. It's a bit of a judgment call. There are tensions in the Middle East, and we are expecting them to increase, so that could support oil prices. So for the rest of the week and perhaps Monday and Tuesday of next week's trading session, might see oil prices moving in upwards fashion. Overall, still a bearish outlook. It would have to break above R1 for me to switch towards a predominantly bullish outlook. But I would not be surprised to see a retracement now back up to R1 based on what we've seen and based on the fundamentals, not the technicals, the fundamentals. The fundamentals could provide support for oil's price, whereas the technicals still, for now, support a bearish bias for the commodity. So we've done the pairs that we wanted to see. S&P 500, we could look at it in a bit. NVIDIA, ExxonMobil. Okay, Tesla. McDonald's, despite their disappointing sales, is moving in an upwards fashion, having broken above R1. $264 per share, taking aim for 277. That is our R2. This now becomes our resistance turn to support. What else would we like to see? Done majority of that. NVIDIA. Yeah, once again. Microsoft. So the report from Microsoft is that they released their earnings. They came in higher than expected earnings per share and revenue. But the decline in the company's stock price could be that the revenue expected from Microsoft's Azure cloud services was lower than forecasted. That is a bit of a concern potentially for investors, which could weigh on the company's stock price. So we do have S1 at $409.20 per share. I will be readjusting my S2 slightly, 383.50 or 55. That is S2. And then we would require S3. Now we can't bring S3 that close to S2. It would be too close, and we're looking at this from a more macro perspective. So I'm taking this old high here. And now the decision is whether or not to take the closing figure of the bullish candle or the opening figure of the bearish candle. So how do we decide on that? Is I'm looking at the recent price action, closing. I'll just point this out. Insert shapes or arrows. Let's see. Let's zoom in. So as we said, let's see what this rectangle takes. So if I place my support line at the closing of this bullish candle, we can see that another bullish candle opened and found support despite that wick. Whereas had I placed it here, not that much of a difference. So I will be opting for the closing figure of that bullish candle that we mentioned before. So here, finding support here, so validating this as an actual support level. So this would be my S3. So 359 or 360 if we round that up. but I'd rather just put 359.70 as my S3 support line. So we have S1, S2, and S3. Overall, it does appear to be moving in a downwards fashion. We are on the daily time frame. The RSI is at 36, implying a bearish market sentiment. S1 is 409, S2 383.55. I'm keeping R1 at 437.90 just in case it wants to reverse trajectory and take aim. It's not that far off, so still valid. If we add another indicator as well, let's see, we could use parabolic SAR, on balance volume, Ichimoku, average standard deviation, Bollinger Bands, we already have that, ATR, MACD, we could look at MACD, turning negative, bearish. I want to look at the on balance volume as well. Let's see, does it support the predominant market direction? Ooh, Ooh this is this is interesting. Now, it's moving in a downwards fashion. Double top, double bottom. That is a bit surprising. Look at the OBV. So I'm going to show what exactly I'm looking at now. And then it will all make sense in just a moment. So vertical line properties. Let's turn this to something easier. Voila. Okay. So on balance volume for Microsoft stock price on a daily chart. I would like you to compare the upwards moving trend line that was formed on the 30th of April on the chart, and then look at the upwards moving trend line also on the on balance volume indicator that was formed. So you can see it's really similar. Moving higher, retracement, high, retracement, high, retracement. This was a high as well. So the retracement broke a prior high here, moved higher, and then dipped below. I wouldn't be bearish for the company stock price just yet. Instead, I would maintain a sideways bias between 409.20 and 437.90. If it breaks below S1, I would switch for a bearish outlook. If it does break above R1, switch for a bullish outlook. Now, despite the Bollinger Bands appearing to be tilting towards the downside, implying a bearish market sentiment or bearish tendencies, the unbalanced volume forming a double bottom here, it shows a bit of indecision if you ask me. What I would have liked to see was a lower low and a lower high, not a double bottom and a double top. So I'm maintaining a sideways bias for the company stock price. I would not be bearish just yet. So this is something I would like to monitor in the future, and we'll probably look at it in tomorrow's live technical analysis session, or starting next week, we'll have a look at what happens later on this week, and we'll see what happens with the particular company's stock price. So just a small recap as well for the S&P 500 appears to be reversing a bit of course, broken above R1, taking in for R2 5,590. Dow Jones 30 still needs to clear this high for me to be bullish. And let's look at the Nasdaq broken below S1, might be retracing back up to our support and resistance level to validate this before continuing on its downward trajectory. A bit of an issue for the tech sector. RSI is still at 70. So overall would still be bearish. But if the Fed is dovish, we might see it breaking above us S1 and staying between S1 and R1 for the rest of the week, making a new all-time high. At this point, it seems a bit far-fetched, but it's still possible. Everything is possible. But for now, for today, perhaps a bit bullish up until the Fed's interest rate decision. But once again, we'll have to wait and see. We'll probably put out a tweet following that decision. And yes, I think that does it for today. If I do not see you tomorrow, I'll see you all next week. Thank you very much for watching and take care.
Okay, let's go ahead and get started. So first things first, as per usual, a risk warning. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. As well as a disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Redistribution of the material is strictly prohibited. Okay, I'm Melanie and I'll be your speaker for today. I'm from the company Everest Fortune Group, finalist for Best FX Research and Equity Research in the years 2019, 2020, and 2021. So here's our agenda for today. Firstly, we're going to be talking about what exactly is correlation. And then we're going to be looking at the differences between positive and negative correlation in the context of trading, strong versus weak correlation, and correlation across multiple timeframes. Lastly, we're going to be using correlation to identify support and resistance levels as well as breakouts. Okay, so let's go ahead and get started. So what exactly is correlation? So correlation in trading refers to the statistical relationship between two financial instruments or assets, such as stocks, currencies, commodities, etc. A positive correlation means that the two assets move in the same direction, while a negative correlation means that they move in opposite directions. For example, if the price of gold and the value of the US dollar have a negative correlation, then when the price of gold goes up, the value of the US dollar typically goes down, and vice versa. So here I've included a list of the scale of correlation coefficients. So a perfect positive correlation is +1. These are just a couple of values to take note of, while a negative perfect correlation is -1. So we will typically look out for strong correlations with values of 0.8 and above or below -0.8. So traders make use of correlation analysis to identify potential trade opportunities and manage their risk. So for example, if a trader holds a long position in stock, they may want to consider taking a short position in a negatively correlated asset to offset some of the risk of the long position. It's important to note that correlations can change over time, so traders must continually monitor their relationships. Additionally, correlation does not equal causation, meaning that just because two assets have a high correlation does not mean that one is causing the other to move. So here is the correlation table from my FX book. So you can use these correlations to find the most or least correlated Forex currencies in real time. So you can make use of the filter that I've highlighted to find exactly what you are looking for and adjust the time frame to whatever you prefer. So we typically want to look for correlations higher than 80 and lower than -80. So you simply input that into the filter and then it will highlight all of the currency pairs that match up with what you have requested. So that is an easy way of finding correlations. So you can see the highlighted green areas are the positive, highly positive correlated currency pairs, and the red highlighted areas are the strongly negative correlated currency pairs. Okay, so we can take a look at this later on after we've gone through the slides. Here's another correlation table. This is from CMC, and it shows how the different currencies relate to one another as well. So you can see that the intensity of the color, it gets more intense when depending on the strength of correlatedness of the currency pairs. So for CMC's correlation table, this is just a brief overview of a couple of major currency pairs. Whereas if we're taking a look at the correlation table from my FX book, which was what we looked at earlier, they have a couple of exotic pairs as well. So we can explore those later on. Okay, now let's take a look at a couple of examples. So these are our correlation currencies positively correlated. So those typically positively correlated are the Aussie dollar and the Kiwi dollar, followed by the euro and pound, as well as the dollar index, the CAD, and the Swiss franc. So we're going to be looking at an example first between the Aus franc and Aus CAD. So you can see this is a screenshot from my FX book, and it shows us an 84.2% positive correlation between the two currencies. So let's take a look at that. So here is the Aus franc chart at the time when this screenshot was taken. This is the Aus franc chart, and this is on the daily time frame. And this is the Aus CAD chart on the daily time frame as well. Okay, so just by looking at these two, you might see some similarity, but perhaps not extremely strong. But if we compare them side by side, and I'll show you guys how we can do this on TradingView as well. But you can see exactly how similar these graphs are. And that kind of explains why the correlatedness of these two charts is so high at 84%. Okay, now let's take a look at another example. So earlier I mentioned, or I didn't really mention this, but as an example, but here we have GBP against the US dollar and pound against the Japanese yen. And you can see the similarity as well. Okay, here's another example. In this case, we have the Kiwi dollar versus Japanese yen, as well as the Aussie dollar and Japanese yen. So we mentioned earlier that the Aus and Kiwi are typically positively correlated. So you can see how similar these charts are as well. Although there are some areas where there is a little bit of a difference, but typically the movement and the direction of the prices are about the same. So it's important to note as well that when you are comparing two different currencies on one chart, that both of these currencies should be in the same time frame. So here we have the hourly time frame. Here we have the daily, and originally we had daily as well. Okay, because different charts tend to have, or rather different time frames tend to have different directions, even though you're looking at the same chart. So when you're comparing two different currency pairs and looking at a correlation, it's important that you look at both of them on the same time frame. Okay, here is another example. Once again, we have Aussie dollar. We're going to be comparing this with the Kiwi dollar. So here we have the Oz on a daily time frame. So you can see price is moving above the Ichimoku cloud, giving us a bullish signal. And here is the Kiwi dollar. So if you look at them side by side, you might see some similarities, but perhaps not too much. It's not too obvious yet. But we can point out these three swing highs are similar to these three swing highs on our Kiwi dollar. Okay, so once you compare the main graphical features of a chart, it's pretty easy to spot the similarities. But of course, if we use this feature that they provide on TradingView, it's a lot easier to see exactly how similar these charts are. Yeah, if you're comparing for correlatedness. Okay, here's one more example before we look at negatively correlated currencies. So here, once again, we have a positive correlation. In this case, we are looking at the SPX, so a commodity, as well, or rather an index, as well as euro dollar, which is a forex currency. So now, although this is positively correlated, you can see that there are some areas in the past where they are not positively correlated. Here we have a swing high on the SPX, as well as a swing low on our euro dollar. But after the swing low, we see that the general direction of price movement for both of these are pretty similar. Okay, so we can continue to expect prices to be similar unless we spot a breakout, and we'll get into that in a little bit. Okay, let's move on to negatively correlated currencies. So pretty commonly spotted negatively correlated currencies would be the DYX and gold, and the DYX and the Aussie dollar. So since Aussie is pretty positively correlated to Kiwi, you can also say that the dollar index and Kiwi would typically be negatively correlated as well. Okay, so now let's take a look at an example. So this screenshot is from my FX book once again, and we're comparing between the Aus franc and Euro Aus, which gives us a negative correlation of a negative 90.9%. So it's pretty strong. So here is our Aus franc chart. Okay, and here is our Euro Aus chart. Once again, both of these charts, we're analyzing them on the same time frame. In this case, we're using the daily time frame. Okay, so if we're taking a look at the indicator as well, prices are moving above the Ichimoku cloud on our Aus franc chart, giving us a bullish signal, whereas on our Euro Aus, it's giving us a bearish signal since price is moving below the Ichimoku cloud. Okay, so side by side, I think it's pretty obvious that these charts are not similar at all. But if we place them side by side, it's interesting because you can see exactly where are the spots where they intercept. And for a swing high, we can expect a swing low on the other currency and vice versa. So these are pretty um, important if in order to spot perhaps a reversal or a bounce off of specific resistance or support areas. Okay, now let's take a look at another example. Here we have Aussie dollar as well as the dollar CAD. So once again, it's interesting to see a swing high. You can expect an exact swing low at the same time for the other chart. Okay, here we are looking at SPX and gold. So SPX is the blue line and gold is the orange. So in this case, we don't have any specific swing highs or swing lows that we can compare like in this one, but we can just see exactly the direction or rather the opposing directions in which these two currencies are moving, are commodities. So gold is definitely moving downwards, whereas SPX is definitely moving upwards. Okay, so let's take a look at how we can use correlation to identify breakouts. So over here we have gold and the DYX. So if we take a look at both of these charts, we can see that they are negatively correlated because the general trend for gold is upwards, whereas the general trend for USD is downwards. Okay, so here we have a hidden resistance level here at 1799, whereas we have a support level here at 11707. Okay, and on the same day, on 6th of May, you can see that price on our gold actually broke out of this resistance level and it headed upwards. So on the same day, price is kind of heading downwards, but it hasn't broken out of this support level yet. So this is kind of a foreshadowing, you could say, of or we can expect US dollar to also break out of the support level in this case. Okay. Okay, so it's clear that correlations do change, which makes following the shift in correlations even more important. So sentiment and global economic factors are very dynamic and can even change on a daily basis. So strong correlations today might not be in line with longer term correlation between two currency pairs. And that's why taking a look at the 6-month trailing correlation is also very important. This provides a clearer perspective on the average 6-month relationship between the two currency pairs, which tends to be more accurate. Correlations change for a variety of reasons, the most common of which include diverging monetary policies, a certain currency pair's sensitivity to commodity prices, as well as unique economic and political factors. Okay, so now I'm just maybe gonna show you uh, the My FX book correlation table. Okay, so can you guys see my screen? Okay, yes. So Here we have a correlation filter, and you can see here we have many different kinds of currency pairs, not just the typical majors. Here we also have the Sing dollar, and a lot of other exotic pairs as well. So let's go ahead and make use of our filter. So we can find currencies with correlation lower than and higher than. So as I mentioned earlier in our slides, we typically will look for strongly correlated currencies, either positive or negative, and how you determine whether they are strongly correlated is typically if they are 80%, oops, minus 80 and 80% for positive. So time frame is pretty much up to you to decide. We're just going to use 1 day for now. So you can see here, maybe I'll take note of the Euro Oz as well as the Oz franc, and then we can take a look at the chart together. Okay. Mm, okay. So from the MyFX book table, it tells us that on the 1 day time frame, Euro Oz and Oz franc are strongly negatively correlated at negative 88.2%. So let's analyze Euro Oz first together and see if they are really so strongly negatively correlated. So we typically like to analyze on a higher time frame first, just so we have an idea of where prices are headed towards. In this case, we can see prices are definitely heading upwards on our monthly time frame, on our weekly time frame as well, and on our daily time frame. Okay, I don't have a trend line. Let's see if we have a trend channel. Okay, I have a trend channel as well on our daily time frame. Okay, so let's go ahead and include some support and resistance levels. So here I can see a really strong overlap support level. Okay, okay, this resistance level is pretty significant as well because we have multiple swing highs. Okay, here's my first support and here's my second support. Okay, that's all I'm gonna do for analysis first for Euro Oz. So now we can take a look at let me just pull out another window so we can compare them side by side. Okay, so now we're gonna go ahead and take a look at um Oz franc. because, yeah, so Aus franc, and maybe we'll look at an indicator as well. Okay, so really bullish signals on our Euro Aus. We have price moving within this ascending trend channel and price moving above the Ichimoku cloud as well. So now if we look at Aus franc, let's take a look at the higher time frames first. Okay, we can see prices are definitely heading downwards on our monthly time frame, on our weekly time frame as well, and on our daily time frame as well. Okay, let's see if we have a trend channel. Okay, we kind of do have this descending trend channel here. Okay, so for a valid trend channel, just a recap, you want to make sure that you have at least 2 touches on top and 2 touches below. Okay, so similarly, we're gonna go in and analyze. So we're just gonna simply add a couple of support and resistance levels. So here's my first support. Okay, so now let's go in with Ichimoku cloud as well. Okay, and prices are moving below the Ichimoku cloud, giving us a bearish signal. Okay, so here they are side by side. By looking at these two alone, you probably won't see much um, correlation. Just that one is going up, one is going down. And as well as from our indicators and our graphical analysis, then we know that um, there is a difference in direction as well. So okay, so now that we have done that, I'm just gonna place both of these charts on the same scale. And let me try and change this to a line chart as well. Mm, I can't quite remember how to change. Um, Okay, but never mind. You can kind of see it as well on just from the difference between these two charts. So you can see whenever there is a swing high, we can expect a swing low as well. Okay, and then now let's take a look at it on our 4-hour chart. Okay, no. So you can see since the correlation is on a daily time frame, so I'm analyzing it on a daily time frame as well. So you can see on the 4-hour chart, it doesn't really tell us much apart from the difference in direction. Okay, whereas on our daily time frame, you can really see when there is a swing high, the difference in the swing low, so on and so forth. You can see when price reversed off as well between the two charts. Okay, so now we've looked at a negatively correlated chart. Let's go ahead and take a look at a positive one. Okay, let's go ahead and use the GBP pound yen and Aussie yen since it's 94.7%. Okay, so same thing, we're going to analyze it first on the higher time frames. Okay, prices are kind of ranging on our monthly time frame. And on a weekly time frame, prices look like they're heading upwards. Okay, daily time frame as well, general direction is upwards. Okay, so first things first, we're gonna see if we can find any trend lines or trend channels. Here I have a bit of a ascending trend line. Okay, next let's include our support and resistance levels. So first resistance would typically be at the highest swing, closest swing high to where price is at. I'm just going to label this as an intermediate resistance or support since price has tested off this level before. In fact, many times before. Okay, and then okay, here's my first support. And my second resistance here. Okay, it does look like we have a little bit of a conflicting direction here because prices are testing this strong intermediate support level. So we're not sure if it's going to break the level or continue to move in this ascending trend line. Or it could even move within this descending trend channel. And because the general direction on both the weekly and monthly timeframes are pretty, monthly is pretty ranging. Weekly is definitely moving upwards. Okay, so this is where correlation comes in handy as well. When you're not too sure about the general direction of price, we can look at a currency that's really closely correlated. In this case, it's pound yen. Okay, so let's take a look at the monthly time frame. You can see the similarity already. Prices are pretty ranging on monthly. On weekly, they're definitely heading upwards. Okay, and now let's take a look at daily. So daily also, they're definitely moving upwards. Okay, so pretty similar to what we saw earlier. Okay, I don't think we have any trend lines or trend channels, so I'm just gonna go ahead and add some support and resistance levels. Okay, so in cases like this, where we don't have any previous swing highs, okay, this is pretty far back, but okay, we can make do with this. Okay, so this would be our first resistance. And first support. Okay, but in a case like this, we would pull out our Fibonacci levels. Okay, so that's what I'm gonna do now. I'm gonna make use of my Fibonacci extension. So Fibonacci extension is basically when you take this Nike tick and you look for a projection of where prices are heading towards. So here we have, so we use these two levels, 127.2 and 161.8. And I can see my 161.8 matches my first support. Oh. And let's see if we have a projection as well. So similarly, projection, we use these three levels. Okay, and okay, here. And I can see that my 100% matches up in this area as well. Okay, so I'm just going to keep my 100%. Okay, so now we can compare the two. Okay, see how closely related these two currencies are. Okay, I'm going to remove it first and zoom in. Okay. Okay, so you can see exactly how correlated these two currencies are. So since our AUD looks like it's dropping, but we're not sure if it's going to continue to drop or continue to head up, but you can see on our British pound, Japanese yen, it's definitely moving upwards. So it could be a sign for us to expect it to continue to move upwards as well. Okay, let me know if there are any questions or if you guys have any other specific currency pairs you'd like to see. Okay, we've done a lot of forex currencies. Maybe let's go ahead and take a look at some commodities and indexes. So the dollar index and gold are um, negatively correlated typically. So we can take a look at both of these charts now. Okay, so let's go ahead and take a look at it on the higher time frames. So I'm gonna analyze this on the 4-hour chart. So we like to look at time frames that are multiples of 4 to 6 times. So I'll look at the daily as well as the weekly. Okay, so here we can see prices moving, it's kind of ranging on our weekly, and it's moving downwards on our daily. So now let's go ahead and analyze this on our 4-hour chart. Okay. As per usual, I want to drag it back as far as I can. This will be my first resistance. And this is my first support. Okay, I'm gonna change these later on when we include Fibonacci levels if there is a need to. And then my second support will just be over here. Okay, now let's go in with our Fibonacci levels. Here I have a retracement. So for retracement, we use these 5 levels. Okay, and I can see the 38.2 matches nicely. Let's see. Okay, I have another retracement here. My 61.8% matches my first support. Okay, and my 78.6 matches my second support. Okay, I'm just gonna clean this up so it's not so messy. Okay. So now let's take a look at gold. Maybe we'll use Ichimoku and MACD as well. So you can see price is moving within the Ichimoku cloud, so we can't use this. but price is giving us a bearish signal on our MACD. So let's take a look at our gold. On the weekly time frame, it's giving us kind of ranging as well. Daily time frame, it looks like it's moving downwards, and 4-hour time frame. Okay, here's my first resistance. My first support here. Okay, same thing, we're gonna go in with our Fibonacci levels. Okay, my 78.6 lines up nicely with my first support. Okay, and my 61%, I'm just gonna highlight this as an intermediate area. Okay, now let's pull out some indicators. Ichimoku, MACD. Price is moving below the Ichimoku cloud, giving us a bearish signal, and price is giving us a bearish signal on our MACD as well. So this is our DXY giving us bearish as well. But as I mentioned earlier, they are very famously negatively correlated. So let's look at them side by side. Okay, you can see some instances of negative correlation. Here we have swing high and swing low on our DXY. If you can see it side by side like this. Okay. But of course, it doesn't look like it's extremely correlated right now because as I mentioned earlier in the slides, there are a lot of factors that can change whether two pairs are correlated or not, which is why it's important to take note of the fundamentals as well. So yeah, that's all I have for you guys today. If you guys have any other questions, feel free to let me know in the chat. Yeah, but this webinar is just to show you guys how exactly you can make use of correlation to help you out when you're trading. Yeah, but of course it's not the only, you shouldn't use correlation as the only indicator. You can see I've used a lot of technical indicators and taking note of fundamentals, especially when you're trading DXY or gold or any other major currency pairs. That's important as well. Okay, so if there's nothing else, I'll see you guys next week and have a great rest of your week. Bye, guys.